All right, well, now that the Fed cut interest rates, the big question is, what does it mean for Middle Tennessee homeowners and also builders, too? And will rates come down enough to refinance? I talked with two real estate experts about what this cut means for your mortgage payment. After a slower summer selling season in Middle Tennessee, the Fed's recent rate cut has been met with applause.
The Fed cut was welcome news first one since 2020.
Jack Gahn with Greater Nashville Realtors says lower rates could save you lots of money on your monthly payment.
For those people out there that don't realize the difference between 8% and 5 or 6% in a mortgage interest rate, we're talking thousands of dollars saved monthly to a consumer.
But Gahn also cautions not to expect mortgage rates to fall perfectly in line with interest rates.
The first thing that people need to realize is that typically just because you hear rates cuts, that does not mean interest rates as it relates to the mortgage industry.
A lot of consumers would say, well, wait, my mortgage rates went up for 2 years as interest rates went up for 2 years. And so now hopefully interest rates will come down for 2 years and my mortgage rate will as well. But that's not necessarily the case. Why is that? What other factors play into this?
The Fed obviously is the largest indicator of what's going to happen, but other factors play into it, whether it be supply and demand as far as the inventory goes. When we look at the Treasury yield, that typically also has a bigger part in it as well, just as much as the Fed does.
And the answer to that is it remains to be seen.
Jeff Checco with the Ashton Real Estate Group of RE/MAX Advantage says that it's too early to tell if the Fed rate cut will also bring down mortgage rates for everyday Americans with a 30-year loan. But for Middle Tennessee home builders and contractors who take out short-term loans tied to the prime rate, this Fed cut offers instant help.
For builders and short-term speculators that have loan products that are dependent on the short-term rates, it's an immediate relief.
And according to a new RE/MAX study, the number of Greater Nashville homes sold in August fell 6.6% as the rates came down a bit and the supply has gone up the past few months. The median home price dropped to $450,000.